What we've observed is when we've been going out today and looking at our international banking group, both, FAB, ENBD, QNB figure on that list, and they are very actively evaluating transactions. They're now developing their own project finance framework. So they're very comfortable doing corporate style transactions, but project finance framework for them is more GCC focused, but we expect that to expand, and they will be doing like DBS, like MUFG, SMBC, Mizuho have been very, very active on the project finance side. The area where I think GCC has sort of led in terms of investment is foreign direct investment equity into the Indian markets in direct exposure at project level or exposure at platform level. Those transactions, I think, I would right now say that earlier GCC used to do it by a fund of funds. So they would invest, there would be an LP into a JIP / a Macquarie, and then they would do it. And what would happen is while Adia, Mubatla are happy to take a 500 million call on a direct project investment opportunity, the funds that they've given money to would do $150 million investment, right? Because they want to diversify. Now they've started doing it directly, right? So they're sort of leading this position. There is a transaction in the talks which would essentially mean that GCC would be a majority shareholder in one of the largest renewable platforms in India. So what then ends up happening is that once you've got direct exposure to equity risk, which is the toughest risk to underwrite, and you're taking scaled exposure, that would help more and more capital to come behind it. A lot of the debt capital, by the way, from the fixed income interest from GCC has gone either to sovereigns, right, or they've gone to US, Europe, mostly US, right? So I think that we need to see more and more of GCC fixed income flows also coming in directly to issuers from Asia. That would effectively mean that between Singapore and Dubai, you can close your books, right? I mean, you don't even need to wait. I mean, London is becoming increasingly less relevant, right, from a time zone perspective. US is going through a cycle where there is a lot of interest in one particular sector, disproportionate interest in one particular sector domestically in the US. So, but I think that is one area which they will see. But that's the way we see the pots of capital that are there in this market. But FDI / direct equity investment, some of the most informed investors and long-term investors are sitting in this in GCC, which is phenomenal.